what happened in Terra Luna. It's tragic, of course, that so many people were taken in by that, but it's not going to happen again. There are others who are trying to offer 40% annualized yields on their stablecoin, and they're not getting network effects. Let's put it that way. And so I think the best thing that our industry can do is call out those kinds of bad behaviors ourselves to the best extent possible, as many in the industry did. And will it be used for regulation? Yes, unfortunately, and that's why Senator Lummis's bill, I think, is so important because it does make the distinction.
Michael Saylor, Senator Cynthia Lummis, and the CEO of Custodia Bank, Caitlin Long, in a recent panel discussion at the Heritage Foundation, shared their views on the Terra Luna crash and how it affects the crypto industry as a whole. A few weeks ago, a stablecoin called Terra USD and its sister currency Luna dropped about 99.9%, rattling the broader crypto market, including tokens like Bitcoin and Ethereum. Terra Luna is now totally worthless. This has created fear among investors. Even aggressive, bullish crypto investors are now panicking. On 7 May, UST pegged against the US dollar started falling on all crypto platforms across the globe. On 9 May, its value had fallen to 35 cents after a massive sell-off. Luma, another crypto coin that also backs UST, lost all its value and fell to almost zero. UST investors lost almost $4 to $5 billion in just a matter of days. This sell-off in one coin triggered a broad sell-off in the crypto market globally, and investors started pulling out their money from crypto assets. Though the Luna crash has created very bad vibes for investors across the crypto industry, Michael Saylor sees a lot of benefits from the crash, as he explained in this video. Senator Cynthia Lummis also shared her views on what the government is doing to prevent a similar occurrence. Before we listen to them, please don't forget to smash the like button and consider subscribing if you are yet to do so.
And as you know, not all cryptocurrencies are created alike. Among the things that also happened within the last 30 days was the Coinbase concern that if it went bankrupt, that the Bitcoin within Coinbase actually belonged to the owners of Coinbase, not to the people who were having their Bitcoin custodied by Coinbase. So we all need to understand, not your keys, not your coin, not your keys, not your coin. If you don't have the password or whatever you want to call it to get your coin, then it's not your coin. And these are the kind of things that we're all learning in real time as they play out, and that need to be, once again, contemplated within a regulatory framework, but not regulated to the point where it stifles innovation. And it's going to be tough because there are frauds out there. There are scams out there. I worry that people conflate all cryptocurrencies, and they're not all created alike.
I think that Terra Luna collapse is going to be good for the industry. It's going to accelerate good regulation. Not all regulation is bad regulation. If you go to CoinMarketCap, there's 19,500 cryptos out there, and there's massive confusion. And a shakeout in the industry would be advantageous because the average mere mortal doesn't have time to study 19,500 cryptocurrencies. And there is a bona fide large demand for stablecoin that's safe and transparent. And it's been difficult for legitimate institutions like Caitlin's bank to issue those stable coins because there's been a regulatory deadlock in DC. Like, people know they need to do something, but there was no urgency to do it. And I think now this is front and center at Treasury and in the administration and in Congress. And I expect that whatever kind of clarity was going to come is going to come faster because now there's a reason to accelerate the pace. And I mean, some people think like Bitcoin benefits from anarchy or lack of regulation. That's not true. In fact, I think Ken Griffin said this last week, the CEO of Citadel. He said the entire industry deserves clarity. We need to understand what's a security. We need to understand what's a currency. We need to understand what's a commodity. And if the SEC does this or gets together with the CFTC and issues some guidance, tier one firms like his, Citadel, Goldman Sachs, JP Morgan, they can all start to get involved. And then what we'd like to see is everybody want to play in the industry, big investors bring money into the industry, and then the banks. You might have seen David Solomon was on CNBC a couple of days ago, and they asked him, do you custody Bitcoin or crypto? And he said, no, we can't. Okay, well, there's a little, can you as a bank custody it? Can you not as a bank custody it? When I talk to the CEOs of publicly traded FDIC insured banks, they go, oh, we can't issue stablecoin. Our regulator won't let us. So at the point that there's more clarity, I think the banks will get involved, the investors will get involved, lots of people will get involved, and of course the bad actors and malicious scammers will get squeezed out of the industry because not all these things are alike. They are very different. And the general retail population, they don't have a choice between taking a stable coin from a bank or a stable coin from an organization that, ETFs disclose their holdings every day, right? And how about every week, every month, every year? Right now, 70% of the stable coin in the market, there's no disclosure, even in a year, of precisely what's backing it. So the market wants $1 trillion worth of this stuff. Everybody wants it. I can't get it. And the banks that could provide it aren't allowed to offer it. And so we're kind of in this kind of deadlock. And if it took the Terra Luna blow up in order to unstick that, I mean, it's bad for them, but it will ultimately result in an industry that's more mature and more functional.
While many crypto enthusiasts are against any form of crypto regulation, Michael Saylor and many others believe that regulating cryptocurrencies could be a healthy development for the industry, at least where everyday investors are concerned. Greater regulatory guidance, if well-targeted, could help reduce speculation among crypto assets. It's hard to predict how the price-sensitive asset class will react to regulation over the long term, since it'll depend on whether the U.S. government takes a more lenient or stringent approach. In the short term, any new regulation could inspire knee-jerk investor reactions to the markets, suppressing the trading values of cryptocurrency. For example, when China banned cryptocurrency transactions in September 2021, cryptocurrency markets dropped. But over the long term, regulation may have the potential to stabilize the market and reduce some risk for cryptocurrency investors.
If Treasury or someone gives FDIC banks or any kind of chartered bank, a state chartered bank like Caitlin's bank, the ability to issue a stable coin, that'll accelerate the industry. I think if the SEC regulates the crypto exchanges as national securities exchanges, that will actually accelerate corporate adoption. I think if they mandate full and fair disclosure for all the unregistered securities that are trading in the crypto industry, like the Lunas and the Terras just melted down, that'll shake out all of the garbage. That will accelerate a flight to quality. And to Ken Griffin's point, there's just a lot of public institutional investors that they won't touch it because it's like you're slimed by association with the garbage. Right? Bitcoin is backed by $20 billion worth of semiconductors and hardware and energy. And then, yo-yo coin number 97 was ginned up in the basement of some dude in some place that is located behind a Tor node. And you just don't even know who that is. And so if you're a mainstream investor, the Charlie Mungers and the Warren Buffetts of the world, they're not going to dig into this. They're just going to read something and they come to a very quick conclusion. And like it or not, people with less knowledge than you have more money than you. And the market is dominated by them. So you want to see more corporate adoption, right? You need the FDIC, the Fed, Treasury, the SEC, CFTC, they all need to move forward. FASB has a big role to play. And the good news here is everything I just named is highly predictable. It will happen. It's just a question of does it happen in 6 months, 36 months, right? 60 months, right? And you have to decide.
Michael Saylor is obviously not fazed by the recent collapse in the price of Bitcoin, even though his wealth, reputation, and his company's fortune rest on the performance of Bitcoin. In a recent interview with Fox Business, Michael Saylor pointed out that digital assets are grouped into 3 classes. In his words, Michael Saylor mentioned that one of the established truths of the market is that Bitcoin is the crypto king and is perfect. The second confirmed truth is that stablecoins are gradually seeing adoption as participants have purchased the assets. Finally, he mentioned that the third class is altcoins that have not undergone any regulatory approvals. The MicroStrategy CEO also discussed how this crash was the best for Bitcoin while predicting that more stablecoins would undergo the much-needed regulatory oversight. Saylor mentioned that the crash opened traders up to the difference between Bitcoin and other tokens in the market. Do you agree with Michael Saylor that the Luna crash is a good thing for Bitcoin acceptance as the king of crypto and the coming regulations for altcoins? Let us hear your opinion in the comments. Thanks for watching.